Look at what NVIDIA is doing. We got 1, 2, 3 gaps. Over here, it looks like we're starting to repeat the pattern. Why does this matter? Well, because we eventually filled the 2 gaps we're pointing to here, but we did not fill the lower gap. What does this mean? It means that maybe we're forming some kind of blow off top here where we get 1, 2, 3 gaps, then we get an exhaustive move, then we go sideways to down to fill some of these gaps. We also fall back below the 50 DMA. Why does this matter? Well, because we actually have a gap all the way down to here. We got a gap here. We got a gap here. This stock is looking very gappy. And this really matters because we're going to get a stock split on the 10th. So is that going to be the catalyst for the stock to go down? Are we finally going to see a little bit of momentum come out? Pay attention because today that's exactly what we're going to talk about. Another clue here comes from the weekly chart. And this means that we could actually be bullish for longer. But the last time we had a weekly gap here, it actually got filled. This one did not. So what does that mean? Well, it means that this upper gap here is looking fairly exhaustive. What happened last time was we had hollow candles, which led to an expansion, and we had 10 in a row. I think it was 10. Let me double check here. So we have, starting from here, we've got 11 bars. So we have 11 bars in a row, which are hollow, which means an expansion. Over here, we got 1, 2, 3, 4, 5, 6. So it could last another 6. It could last even longer. All I know is that when we take the staircase up, we take the elevator down. So there could be a sudden drop at any moment. I don't know what's going to cause it. I just want to be really mindful of that because NVIDIA is the king of the entire stock market right now. And we also talked about a pattern this morning on the stream, which I'm finding a little bit eerily similar. Let's have a look here. So if we now delete everything, we're looking at the engulfing candle we have right here. We have an engulfing candle right here. Why is this significant? Well, because I just told you that maybe NVIDIA is going to start a corrective wave. And we have a gap, a gap, a gap on the S&P. These gaps normally get filled. So what happened here? Well, same thing. If we now just go back to where we were, we have multiple gaps as we're going higher, right? One, we got, do we have more here? We got one. We got another one here. And then eventually, after we get that engulfing candle, look what happens. We go low enough to fill all these gaps. This gap is now filled. So that's how gaps get filled eventually in time. I think the difference here, like we talked about as well, is that because we're actually in blue sky territory, this might be a little bit different because this is a high, double top, lower high. Here we have high, higher high, and we don't actually see the loss yet. So I'm feeling a little bit confused right now because, frankly, there are a lot of scenarios. Here's something else which makes it a little bit interesting. Look at look at yesterday's low, 52688. Look at today's low, 52711. Why? Because they power pumped the close. Look at that. Boop, all the way back up into the close. So what does this mean? It means that we're really solidly here in neutral where we could push into greed or equally back down into fear. I don't want to tell the market what it's doing, but I want to be very, very receptive to the idea that maybe there's more under the surface that we need to pay attention to. So when I said in today's video that we have to talk, here's what I'm finding a little bit odd. Let's look at some charts. And then I do want to show you a couple of other quick things. Notably, where are we going to be on Friday when we get this core PCE? Because hey, if this comes in a little bit cooler, we talked about what that would mean. We went here to our pre-market stream. We did this on the video yesterday. And what we talked about was this. Here we go. May monthly close. Pause the video if you want to read it. We went through it yesterday. So it basically means if we defend the weekly higher low, we remain in blue sky territory in an uptrend. It's bullish. Don't fight it. And that's what it looks like the bulls did today. They defended, right? The bears come in. They're like, oh, yeah, that's it. That's the top. Boop. Right back up, right? Look at that move from 527 back up to 530 in like basically an hour. Pretty impressive. So we defended the higher low here on the daily. Zooming out to the weekly, it's a green candle. And at least for now, it's an inside bar. So what does this mean? Well, it means we have a lot of higher lows, low, higher, low, higher, low, higher, low. I'm not going to keep repeating it. All these higher highs, but a failed breakout. So this inside bar, whichever way it breaks, is likely going to be very telling. Because we've now actually gotten a test on the daily chart, which means we actually defended this, I think that the bulls are going to attempt to actually push us higher from here. Am I right? Hey, I think a lot of that depends on NVIDIA because, frankly, that stock is just out of control. But we have to also remember that the market is not two stocks. It's not the S&P and it's not the NASDAQ. If we look here as well, being a little bit objective, the excitement is also dropping off. This normally happens into the summer, but what we like to see is increasing price, increasing volume. So what I mean by we have to talk is that you need to be prepared for the potential drop on Nvidia, but also what happens if Nvidia drops? How does the rest of the market look? Well, right now, if you're in mega caps or tech or semiconductors, hey, it's a beautiful month. We're moving dramatically higher. Here's where things get a little bit wonky. If we look to the dollar, it's been up on the day, but it's down on the month. So we just want to mostly focus on monthly charts. The VIX is still red. The 10-year note is also red. That's good for stocks. But here's where, just on the day, there's not a lot of green out there. If I look across the different ETFs like RSP, well, it's not, looks like a double top right now. It's just below the 164.9 top. The Dow Jones, looking a little bit toppy here. It's back below that previous high. So what I'm looking for is, are we above the all-time high? In this case, we are. And then, are we also above that monthly candle high? Why? Well, that's the note we're talking about here for SPY. Remember, S&P includes 500 individual names. So if we go top down or bottom up, top down just means that we look at SPY. Yes, the market closed green, but it doesn't look like a lot of stocks got to work today. A big block is offsetting a lot of this red. So is the market really strong, or is it due for a drop? I just showed you the pattern on NVIDIA and S&P on the daily chart, and these monthly charts are going to give us some clues here. So RSP, we're back below the previous high, and we're not in a higher high. That's a warning. The Dow Jones, above the all-time high, but a warning by being below the high. XLK, that's tech, we'll skip it. Same thing here for XLV. Looks very similar to RSP and to the Dow Jones. Inside bar, and we're below the all-time high. It's looking like a double top. And this is why it's really a tale of two markets. Same thing here for XLF. Fail breakout, back below the previous top. That looks like a fail. Doesn't look good. Looking at the Russell, this one actually looks better, but it also is not above that high. So is that resistance? Is it support? If you look at CAF, this is the one that looks like a double top now too, right? Rejecting off the previous high. I don't like that. XLE, it's basing, but it's in a monthly lower low after an inverted hammer or a failed breakout. That is no bueno. It doesn't look good by being below the low. Look at utilities, though. Oh, my goodness. Utilities are booming thanks to AI. Yes. Blowing higher here. 7%, invalidating a head and shoulders. The interesting thing here is that XLU usually moves inversely correlated to tech stocks. Not right now, though. NYA, similar, right? Warning signs here on the monthly. ARK, piece of junk, right? Can't move. And then as we go to these other ETFs, it's a lot of the same here, right? We're looking at regional banks, rejection. EEM, this one's looking good because people are diversifying beyond the US. Looking at FXI, it's still okay. It's up 8, but not able to really hold that resistance at 28 or a key relative low. So what I'm really telling you here is that there's a lot of undercurrent underneath the market where if we look here to roughly the last month, it's let's go to sectors. Yes, it's a tale of some sectors are doing good, like mostly here on the left. Some sectors are doing terrible, right? Energy, minerals, consumer services. It's not really as broad-based. If we zoom out to the 3 month is actually not that, it's actually worse. But if we look at like say year to date or the 1 year, this is what we really want to see for confidence that the market is not going to need to go into a bit of a corrective wave. So just to make things really simple, we talked about the weekend, we talked about the monthly chart on yesterday's video. I will leave that for you here in a second, but this weekly chart is really what I'm paying attention to. If we break one way or the other, really important. But before we break the weekly chart, we're going to break this daily chart. And we also talked about how we have SH, PSQ, DOG, RWM, and all those inverse signals which are giving us a warning. So a lot of chart review today. Hopefully you guys enjoyed it. Please smash a thumbs up as you're signing off. If not, maybe you want to subscribe on the right and come hang out with me at 9:30 and 9:15 a.m. tomorrow. Thank you very much.